Hi, I'm Brittany Barton with Iron and Pearl Financial, and you're watching our weekly finance video. We made a video recently on business overhead expense insurance, so if you haven't seen that, make sure you watch it first. You'll find the link for it in the description. But as a quick recap, business overhead expense, or BOE, is a type of insurance that helps you pay your business's expenses and keep your employees in place if you can't work because of a disability. And this is what you need to know about it. These types of plans were designed for sole proprietors or incorporated businesses with up to 5 employees. Certain partnership-structured businesses can apply as well, but only if the other partner or a key employee could not keep the business running on their own. Are the plans like this really important? Well, the Council for Disability Awareness says that 1 in 4 of today's 20-year-olds will become disabled by the time they retire. What would your business do if you couldn't work for just a year? These policies are intended to cover reasonable and regular expenses, such as payroll or utilities. But it's also important to know what it does not cover. Business overhead expense typically does not include expenses that the business was responsible for before you became disabled, the cost of sale or service, travel and entertainment, and more. So read your contract. When you apply for this policy, there are 3 things you'll get to choose from, all of which affect how expensive the policy is. So the first one is your benefit period, which is how long the benefits will pay you for. The second is your waiting period, which is how long between the day that you become disabled and the day that you qualify for benefits. And the third is the benefit amount, which is how much the policy will reimburse you up to. Because remember, this is an expense reimbursement policy. The company does not pay your expenses directly, meaning that even with this plan, you still need to make sure that you're financially prepared for the first couple weeks or months. Because this is a disability insurance policy that your company owns on you, the premiums are tax deductible. However, that also means that the benefit is going to be a taxable benefit. Business overhead expense insurance is typically non-cancelable until age 65. Meaning that until you're 65, the insurance company cannot take the policy away from you, nor can they raise the prices. When you turn 65, chances are your policy will become conditionally renewable for a period of time afterwards. So how much does a policy like this cost? Well, if you're a 35-year-old female RMT who needs about $1,800 a month to cover her business expenses, you could finance the first 60 days on your own, and then the policy would cover you for a total of 12 months. A policy like this would cost roughly $36 a month in June of 2020. So keep in mind, all of the information is for general information only. Always make sure that you consult your insurance advisor about your specific policy. And if you're looking for more financial resources and strategies just like this one's to take your financial goals into reality, then visit ironandpearlfinancial.ca and join our weekly newsletter.